watching Notepad and I'm your host Ibrahim Sani. We're still very early into the year of 2020, and while we are still plotting and scheming our plans on how to maneuver this year, it's best to get in touch with how the realities are. I have with me in the studio Kenny Yi, the head of research of Rakuten Trade. Kenny, again, thanks for taking the time to speak with us. We're going to talk about some of the things that is impacting Malaysia in terms of the economy, the equities market, perhaps some ideas for retail investors to think about when they want to invest, and also, just general thoughts on how this country is doing financially. Let's take a stock take on what has happened towards the end of last year and what is happening right now.
Okay, I think last year we started off rather well. As a matter of fact, things was going pretty well until Mr. Trump.
But decided to assassinate an Iranian leader.
No, not Iranian leader. I mean, it was last year. You were talking about the China trade war thingy. I think that was the bummer for last year. Because after that we saw a lot of volatility, and also inconsistency from Mr. Trump himself. That also, cascade down to the regional market. You can see that, the regional currencies, the regional market has been a yo-yo like quite wildly. I mean, throughout last year.
Okay.
And that also instigate the outflow of foreign funds from Malaysia. As you know, last year I think about more than 12 billion was.
Some estimates go up to 21 billion. But it's interesting that you bring this up, because you argue that it's because of the Trump instigated trade war with China that resulted in the foreign funds outflow.
They play a major part, yeah.
Okay, some commentators would like to argue that it's perhaps domestically the way this country is doing, from the political side, as well as how the partners are doing in Malaysia, with ASEAN countries. Do you think that all the other factors are also secondary, but primary is still the trade war?
Yes, I think what Trump did was the primary.
Excuse.
And then probably Malaysia also did not help ourselves, because last year actually we saw quite drastic downgrade on the corporate earnings. I think come end 2019. I think we are expecting a minus 3 to 4% decline in corporate earnings.
Yeah, across all sectors, or just specific industries that are going to be problematic?
Across all sectors. I mean, overall. Overall, I think the prime suspect would be those the telcos, the gaming. Those has been downgraded quite drastically.
Yeah. Okay. So let's look into some of the reasons why, right, for the corporate earnings downgrade. So we're jumping from macro now more towards corporate. Gaming has been hit by some interesting tax that was introduced.
Yeah.
How is that material to their business?
I think impact on their business is not that drastic. I think the more telling fact for Genting is that the change in partners over their amusement project, the theme park. Okay, now that they have found a new partner, I think things are finally moving along. So that should also shorten the waiting list for the visitors lah.
Okay. All right.
So now I think Genting, many analysts is seeing that less signs of volatility for them. Then also telcos, I think telco this year we should see a rebound, having seen some kitchen sinking activities over the last 2 years. So I think this year telcos we should see a rebound. And also for plantation sector, and this one is a quite interesting development. I think over the last couple of weeks we saw the CPO price surpass the 3,000 ringgit per metric ton level. But if you ask me whether there's any drastic or fundamental change in the catalyst, there's none.
Other than the fact that CPO prices have gone up?
Yes, I think the only thing is that expectations of US buying more soy oil, assuming that that China signs the first phase of the truce with the US. Okay, they buy more soy oil price goes up, that would also drag up the CPO price as well. Because as you know, I think the CPO price is always trading at a certain discount to the soybean prices.
Yeah.
So that's the main reason. And then the second reason is that maybe the upcoming, biodiesel thing again. I think that should also reduce the overall inventory for the sector lah. I think these are the two main catalysts that I'm seeing at the moment.
Okay. I still want to stick to corporate earnings and the respective sectors. You were mentioning kitchen sinking. There's also an argument that they are investing a lot in terms of capex development for 5G. This year, there's no letting up. In fact, if anything, they're going to double down on their capex inventory for building 5G. Our colleague Hafiz Marzuki is literally in Langkawi today, going through the process of talking to E.co on the 5G rollout as well.
Right.
There's going to be billions of ringgit being invested. Do you think that we should go long on telcos?
I think in terms of technology, I think we definitely have to be in sync, okay, with the enhancement or the developments. There's no letting up, okay.
But OPEX is going to be hit because CAPEX is being hit.
Yes, but then you see more returns coming in over the next few years.
Okay.
Rather than you sit back and do nothing. I think
Yeah.
if you can recall, like for Telecom Malaysia for the matter.
Yeah.
These landlines used to be their prime revenue channel.
Yeah.
Okay, but with the advancement of technology, now the internet, all WhatsApp, these lines and landlines are
Obsolete.
Exactly.
Yeah, I get upset when somebody gives me a business card and the number is 03 there. I said, where's your handphone?
Exactly.
Yeah.
So I think technology, that one we cannot let up. We have to.
So betting on, say, for
follow the
instance,
trend.
telco would be a good idea.
Yeah, definitely.
What about the oil palm sector you're mentioning? There's also geopolitical issues happening right now. Malaysia and India are still going through some troubles.
Yep.
Do you think that is going to be a cause for concern for us to look into the plantation sector?
In fact, it is, because I think India, if I'm not mistaken, is the top maybe 3 or top 5, importers of CPO.
Yeah.
If they totally ban, the import of CPO,
Yeah.
I think you don't need to be a genius to see that, certainly the demand for CPO will be affected.
Okay.
But on the same line, I think we may also see China coming in to support and buy CPO if the soy oil price goes up too high, too fast.
Are you optimistic about the trade agreement that's going to be signed between China and US? The guy just attacked Iran.
Yeah.
Like, what the hell?
Yeah.
Yeah.
So I think the guy is trying to, make a lot of diversion.
Okay, because of the domestic issues that he's facing.
For obvious reason, and
Yeah.
also for upcoming presidential election by this year end.
Yeah.
Okay, so I think he's he's creating a lot of diversions for his own benefit.
Okay. Right.
I think China's one of them. Yeah.
So to tie back to our conversation towards what happened last year and something that happened, the first week of this year, KLCI is now one of the worst performing stocks in Asia. It's down to below 1,600 points as of this morning, benchmarked against all the other indices in the region. Everybody else is doing okay. Everybody else is in the green. We're in the red. So how do we match? How do we read this mismatch?
Okay, I think to be fair, KLCI, I think we are the only one that saw red last year,
Yes.
whole of last year.
Yes.
I think down by about 5%. I think for this year, barring any nasty surprises on the corporate earnings, okay, we should expect CI to see positive gains for this year. In fact, we've got 1720 as our target for this year.
1,600, so you're thinking that it might go up to 3 or 4%?
1720, yeah.
Okay.
So I think just now, for the first time over the last 2 years, we are seeing a positive earnings growth for
Can I
this
get
year.
your house view on why it went down?
For last year?
Yes.
I think the outflow of foreign funds, I think is simple as that. The volatility created by external factors, okay, and also you see now in terms of competitiveness against our peers within the Southeast Asia region, we have actually gone down the ranks. You know, now even like Thailand, Indonesia has surpassed us.
Vietnam,
is,
which I want to ask you about.
Vietnam is coming up very fast.
Yeah.
You know, and it can, if we don't do anything, and you know, Vietnam can surpass anytime.
Anytime.
Yeah.
Okay. We'll take a short break. When we come back, we'll continue our conversation with Kenny Yee of Rakuten Trade. Don't go anywhere. Thanks for staying on with us. I have with me Kenny Yee of Rakuten Trade. We're talking about some of the economic events that are currently happening in and around the world, as well as how we can remain competitive. Speaking of which, the trade surplus that Malaysia has is still quite envious by many countries. We are still having a lot of trade surplus with many countries, maybe not against Thailand. But the question now is on the sustainability of how we can ensure that this trade surplus that we have with many of these countries remains sustainable over the long term. The question now is that, say for instance, Thailand, they have 8% trade surplus with the US. That may contribute to the stability of the Thai baht against, say, for instance, Malaysia, who has about a low single-digit trade surplus against, say, the US, resulting in the ringgit being a little bit more, I guess, more volatile compared to the Thai baht. And this is on the back of countries like you mentioned just now before we went to the break, Vietnam, Indonesia, becoming more competitive, and their sectors are becoming increasingly more aggressive in trying to garner more market share. Okay. And they are, of course, trying to get more out of the trade export pie. Against all this, how do we remain relevant and how do we stay ahead?
Okay, so far 2020 we had a good start. Okay, crude oil price has gone up, silver price has gone up. I think these are the two main exports for the country. So I think so far we have, it is a good start for us. And you mentioned about the Thai baht being so much stronger vis-a-vis the ringgit. To be fair, I think apart from the actual economic activities in Thailand, we noticed there's also a lot of hot money, flow into Thailand. As you can see that the Thai authorities, they were also rather concerned of the volume of hot money flowing into the country. That's why you can see that they have been consistently, reducing their interest rate, so to hoping that this hot money will flow out in batches. Yeah.
Do you share that house view of yours where we also might have at least one more interest rate cut for this year?
I disagree. I hope that we do not. Yeah, I hope that we do not cut interest rate because, as you know, that we are not that interest rate sensitive. Malaysia. If there's anything right, I would prefer us to look at the SRR within for the banking sector rather than just playing around with the interest rate.
I think you're not that very popular with bankers.
Yes, I think we did see a cut of 25 basis point. I think a few months back. Yeah. I mean, there's hardly any effect on the economy. I think the only thing is that.
It could be that because they cut it, therefore there's no impact on the economy. Had they not cut it, there would be some negative adverse impact.
I think because I think, to be fair, I think we are not that interest rate sensitive.
At least in Malaysia.
Because I think the amount of hot money, I mean, there's hardly traceable in Malaysia at the moment, unlike Thailand or Indonesia. What I'm hoping is that Bank Negara would maintain interest rate, so that we have this higher yield that would make us more competitive and more attractive to attract foreign funds to come in. I think what they did to maintain interest rate was correct. I totally agree with that. You can see that
the last exercise.
The recent data shows that a lot of inflow of foreign funds going into our MGS. In fact, now the foreign shareholding in MGS has been the highest for, I think, over the past 12 months or something like that.
No, fixed income is doing well.
It's doing well.
Yes.
So we need to maintain this to eradicate any more outflow from the system. I think, as you know, I think and economy thrives on liquidity as well. You know, if you keep on tampering with the interest rate, you know, I think that will also.
To be fair, and I'm not the spokesperson of Bank Negara, but to be fair, they haven't been tampering with the interest rate for
I'm just saying on the whole, you know, overall, you know, like for other countries.
Okay, but I know that you wish they don't lower down the interest rate, but do you think they will?
I hope not. I mean,
again, you're hoping, but
last year,
what do you think?
Last year, I think I was the few. I wouldn't say I was the only one that
the contrarian
saying that Bank Negara would not reduce interest rate, and in which they did. You know, there was I'm very grateful for that.
Okay.
You know, because if the interest rate has been going down, I think there will have a rippling effect on the flows of foreign funds.
Okay. Now let's talk about the economic activities of Indonesia and Vietnam. We can see the economic activities actually doing well. There's a lot of unicorns coming up from both Vietnam as well as Indonesia, and there's also interesting appointments of the unicorn leaders into cabinet. For instance, Gojek's founder CEO is now part of the cabinet of Indonesian President Jokowi's, line of leadership. Do you think that all this is actually going to contribute further and spur further growth for these countries, and Malaysia is really on the outside looking in instead of trying to get, you know, a little bit more competitive with them?
Yes, but Malaysia, we also has been quite active, okay, in promoting all these unicorns and funds, okay, to create all these new sort of tech-based companies. Okay, I think as for Thailand, I think the main benefits for Thailand is that, you know, there are huge, you know, workforce, you know, I think which could be the bargaining chip for not Thailand, for Vietnam. Vietnam. You know, it will be a huge bargaining chip for the country.
Okay.
You know, that's why, you know, we can see, you know, Vietnam, you know, surging up the chart so fast over the past few years.
There are allegations that some of the products that has been manufactured inside Vietnam is not actually manufactured inside Vietnam. The allegation is that these products are being shipped across the border from China because of the trade sanctions and trade war that's happening.
True.
They're just stamping the Vietnam product made in Vietnam to circumvent.
Yep.
Do you think that this, I mean, I don't know. First of all, I don't know how true this is. We don't know how to prove it. I mean, I don't have the resources. I'm here talking to you instead of just going to the Vietnam.
It is true, because I've spoken to a few, quite a number of manufacturers. They say that it is true. But
having said that, does that help in the long term?
It didn't happen overnight. I think the Chinese has already foresee this thing may happen.
Yeah.
You know, the repercussions from the US, things like that.
Yeah.
You know, they have been investing. I mean, as you know, China has been investing in all over the world.
Yeah.
You know, so I think with Asia, you can see that, you know, they have been particularly interested in Vietnam. You know, so, and Thailand as well, so to speak. So, you know, this didn't happen overnight. So they've been investing quite a huge amount over the past few years.
Okay.
Yeah.
We'll take a short break before we conclude our conversation with Kenny Yee of Rakuten. Don't go anywhere. Thanks for staying on with us. If you are a retail investor and you want to think about some of the options that you have right now, particularly in the equities market, we have with us Kenny Yee of Rakuten Trade. Kenny, let's talk about some of the small cap stocks. I want to start off with that because while I don't want to name names, some of the small cap stocks have seen 3-digit growth over the past year. I'm talking about from January to December. And you know, some stocks have grown up to 311%. 400% even, and of course, because they're small cap, you know, from 30 cent and you add another 300%, it's gone to 1 ringgit. That's the volume that I'm talking about, right?
Okay.
But the percentage is also quite interesting. What is the idea of small caps or investing in small caps for this year? Do you think that it's a good idea?
I think there's still huge interest on small caps. I think there's still abundance of liquidity within the stock market, focusing on the small mid caps space.
Yeah.
We can see that since the beginning of this, beginning of 2020 until now, a lot of small cap has also been thriving in terms of share movement until the tension between US and Iran.
That happened midweek this week.
Yeah.
And of course, it might continue on into.
Yeah. So I think now that Trump's, whether you believe him or not, saying that tension has.
I don't believe him, but yes. But never mind.
Never
He
mind.
did say that.
Exactly.
Yeah.
So he said that, I think, okay, I'll give him a benefit of a doubt. Okay, now the tension is, everybody happy investing. Now you can see the liquidity coming back to the small mid-cap space.
Okay.
Okay, amongst the small cap, there's still a lot of interest on the tech-based companies.
Like what?
Names.
Yes.
A lot. The Data Sonic, the MyEGs, the Dufus.
Okay, so the E&E sector.
E&E, E&E and tech-based companies.
Okay.
Now we can also see that the plantation sector has been being re-rated by most of the investment banks. So you can see that the smaller planters has also benefited from this re-rating. Okay, I think over the last month of last year, a lot of smallish planters, their share prices went up quite a bit, double-digit growth.
But cognizant on the fact that they are going up just because the CPO price is going up, not necessarily business operations have improved.
These are all sentiments.
IoT inside their operations or something like that.
It's sentiment, Ibrahim. It's sentiments, Now that, this sentiments has spilled over to the big caps.
Yeah.
The IOIs, the Sam Darby's,
Yeah.
So you can see that, I think if this positive sentiment continues with the plantation sector, the whole sector may actually see a hefty rating.
There's also oil and gas. For better or worse, Brent is now close to $70, perhaps even surpassing that. WTI is at 66. Do you think that oil and gas sector would do well here? Sentiment, right, you say?
Sentiment and oil and gas, whether it's sustainable or not, that was anybody's guess, but I wouldn't bet on it. Okay.
Wow, really?
If there's anything, I would prefer the construction sector.
The billionaire owner of this company that I'm being hired with, is also an owner of one of the oil and gas company. I think he's also going through some issues with that particular company as well.
Okay.
Yeah. Do you think that, companies that have some trouble with oil and gas will continue to have trouble this year?
I think it depends on the companies. Because oil and gas, when you say oil and gas, right, there are a lot of segments within that sector.
Of course, like Silver Dynamic and O&M.
Exactly.
They're doing pretty good.
Exactly. They got the upstream, midstream, downstream. Now at the moment, I would prefer the midstream one.
Why is
segment. That? I think the one is more sustainable and more. I think the foreseeable future is more positive.
Okay. And then perhaps they are less prone towards risk aversion towards
the upstream, you're more so susceptible to the movement of the crude oil price, so that one is quite volatile.
What about large cap? Any stock picks for that one?
Large caps, if you ask me, I will go for the banks. I think banks has been a bummer. I've seen a bummer year last year. Whole of 2019, all the so-called big banks, has seen their share price down between 10 to 20%. I think this year they could see a mild rebound for most banks. And with the
we're talking about the three big banks or the other banks as well?
Overall, I think of course the big ones would see a better rebound.
Okay.
Because they have been sold down quite.
Maybank is the largest market capitalized country.
But I think Maybank was down 10%. But things like Hong Leong Bank and Public Bank, this has been sold down
Quite interesting, huh?
Interesting.
Yeah.
I mean,
because public bank is the legendary
exactly.
figure.
You've never seen their price
Nothing like
down by
that.
so much, you know.
Nothing like that. But do you think this is tied with the corporate earnings or something else?
I mean, the corporate earnings is okay. I mean, there's no drastic downgrade.
So why is that happening? I'm trying to figure that one out as
just
well.
that outflow of foreign funds. Again.
You are everything you want to fall back on that one.
You see, money is liquidity. I mean, the banking share price, they thrive on all these foreign funds, you know. So when the foreign funds come in back to Malaysia
for this year,
first thing they do, look at banks. You know. So that's why I see a
stoic, steady, solid.
Exactly. Okay. And liquid.
Okay.
You know, because foreign funds, they like liquid stocks. The banks, they offer this. So you can see that, you know, with the expected inflow of foreign funds, you can see that there will be a mild rebound on all these so-called larger banks.
Okay.
You know, and before you interrupted me, I want to talk about construction sector.
Okay.
Okay.
I like to interrupt my guests. I get that a lot. But yes, go on. Construction sector.
Construction sector. Okay. I think this will be the year for the contractors. Okay. Like it or not, because at the moment, a lot of people are still playing the waiting game. You know. But as you can see that, you know, a lot of infra-related projects would be commenced by this year.
Okay.
All right. So with this, right, I think once the news flow start to come out again, you know that construction stocks, they also thrive on news flow. Not actual physical work, but news flow. Who gets what, how much project, you know. So once this news flow comes out in abundance again, you know, I can bet you, you know, most of the contractors, the big boys, the Gamuda IJMs, and the smaller ones would see their share price move again.
Okay. I don't know how familiar you are with the bond market. If you want to share a little bit on that.
Bond market, I'm not that...
Okay, in general then, capital markets in Malaysia, do you think it's going to be something of an interesting place to play, or it's still going to be in the doldrums as last year?
So long, again, going back to the interest rate, you know, there's no major movement of interest rate. I think the bond market will still maintain at current level. You know, I think the MGS now is offering what 3.3, 3.4%.
GII as well.
So it will stay around there. Okay, so long, again, you know, there's no interest rate manipulation from the Feds over in the US. You know, at the moment, there's no indication that the Feds will tamper with the rates. So I think bonds market would be like. There wouldn't be any wild movement. I think it would be like status quo.
I mean, the name is in the devil's in the name. It's called fixed income. So at least, you know. Right. That was my conversation with Kenny Yee, the head of research at Rakuten Trade. If you've missed any part of this interview, just head on to astroawani.com. Look for Notepad over there. You can watch this interview on your mobile devices. Just download the freshly launched Astro Awani app. You can also listen to this interview and interviews such as this on your podcast. Just search for Astro Awani wherever you get your podcasts from. Until then, thanks very much for watching and goodbye. Okay, good luck.